All right, welcome to Chart Work with Carlos. And today I will be going over the market direction, the three different market faces. This is from the playbook, the strategy that I'm working on and refining. And these are the 7 steps that you need as a trader, whether you're a beginner, intermediate, advanced. Use this as a blueprint to identify market direction, support resistance zones, supply and demand zones, break of structure, liquidity, confirmation candles, time and execution on the 5 minute or 15 minute. And I will go over the rest of the steps in later calls. And I will be posting a video for each and every single step. Today, we'll be covering market direction, which is the first step on the playbook, right? This is the playbook. This is the 7 steps that you need as a trader to give you a guide, a direction on how to look at the markets, how to analyze the markets, and you can use this as a guide to your trading. Now, I've been working on this strategy for a couple years now, and I'm still refining it. I'm still tweaking it here and there, but so far it's been working, especially for gold and with Forex and stocks. You can implement this strategy on different asset pairs, and I'll be implementing it, I'll be refining it, like I said, and maybe subject to change. But so far has been working beautifully. And you can also use this for yourself. And so that way you can have a clear understanding how to analyze the markets. And remember, this is a guide. So it's not guaranteed that you'll be getting profits from this or there's no future guarantees. This is simply a blueprint that you can use for your trading because it has been working for me. It may also work for you. Now, the first step we're going to cover here is a 4 hour. We're looking at the 4 hour time frame, and I look at the 4 hour for market direction to see where price is going, what's the trend, if it's an uptrend, downtrend, a consolidation. These are the three market faces. You have uptrend, which is in blue, downtrend in red, consolidation, it's in gray. I've colored each of these respectively so that way you guys can notice this. And also, this is where you're able to identify the higher highs, higher lows on an uptrend, lower highs, lower lows on a downtrend, equal highs and equal lows on a consolidation phase. Now let's examine here. Now here on Euro USD, I'm using this as an example, this asset pair, we're seeing at current price Euro USD on an uptrend. Why? Because we are seeing higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. We're seeing some equal lows right now here in this zone. Within this blue zone, we have a gray zone. I marked it up because we're seeing equal lows here and here. It may break to the upside, it may break a structure to the upside, but we are waiting to see whether it's going to break below or break above this current zone where price is currently at. So you can also have a consolidation within an uptrend or a downtrend phase. Just keep that in mind. So we're looking at the overall picture, looking at the 4 hour time frame, looking at higher time frames, you're able to see the overall direction of the market. And when you go down in time frames, down to the 1 hour, 15 minute, 5 minute, you're able to see the picture at a lower scale. We're looking at the bigger scale here, right? You want to look at the overall picture of where the trend is heading, and you want to trade with the trend. So when you see an uptrend happening at the 4 hour time frame, you want to look for buys. And I can actually type it in here, look for buys on the uptrend. And on a downtrend, look for sells. And for consolidation, you do not want to enter for a trade during consolidation because buyers and sellers are indecisive. They're deciding whether to buy or to sell. It's an indecision status when you're in during the consolidation phase. So remember that you do not, I repeat, you do not want to enter for a trade during these times when it's consolidation or when you see the market going sideways. You do not want to enter for a trade. You want to wait until there's a break of structure. And we'll talk about break of structure on the third step in the playbook, but that is in later calls. And I'll be posting recordings in the future for each and every single step. Now, this week, we'll be talking about the 4-hour market direction. All right. So now that we listed here that it's in a buy mode, overall, the overall picture is higher highs and higher lows, meaning that is buys. And you want to get at least two touches to see a trend. You want to get at least two touches. So we have touches here and here and here, right? So we see an uptrend happening because we have at least two higher highs or two higher lows, right? So we're seeing a trend happening here, right? So now that we know price is currently on a slight consolidation phase, so we're waiting for a break of structure, but we know the overall picture, it's on an uptrend, and there's a higher chance that it may break above this zone, this consolidation phase, for continuation to the upside. So you're waiting for that to happen. Now let's look at other examples. Here we've seen a downtrend on Euro USD because we see lower lows, lower highs, lower highs, lower lows, lower lows. So whenever you see this happening, when you see a market change direction from higher high to lower high to lower low, lower low, lower high, you're seeing a downtrend in the market, meaning that there are sales that are taking over. Lower highs, each peak is lower than the previous high. And for a lower low, each pullback is lower than the last low. So you want to see these trends where you see this lower high, it's lower than this higher high. And this lower high is lower than this lower high. And this lower low is lower than this lower low. So you want to see each peaks where price is going and price is on a downtrend during this market phase. And this lower low here is lower than this lower low. And it's also good to look at the line chart to see the different peaks in the market. So when you change the chart to a line chart from a candlestick, you're able to see these different peaks. Lower low, I'm sorry, lower high, lower high. This lower high, this peak is lower than this previous peak. And this peak on this lower low is lower than this last previous peak. So when you see these peaks, you are seeing a downtrend when you get at least two peaks in the market. Okay, now the overall trend, it's on a downtrend and you're looking for sells. This lower low is lower than this last previous lower low. During the consolidation phase here in the gray, you're seeing equal highs and equal lows. When you see equal highs and equal lows, it's a consolidation phase. Price keeps rejecting at the same top level, and price keeps bouncing from the same bottom level on equal lows. This indicates indecision or a accumulation slash distribution phase in the market. So you're seeing a liquidity buildup. And we'll talk more about liquidity when we go over the fourth step in the playbook in later videos. So when you're seeing a consolidation phase, you're seeing a liquidity buildup. So the market is building up liquidity. There's buyers and sellers within the same range, and they're indecisive about the direction of the market, about price. So you've seen that during this consolidation phase. Now let's look here, continuing with our example. Here we see a major uptrend because we're seeing more than two peaks touching to the upside. There's a higher high, higher high, higher high, higher low, higher low. This low, it's lower than this previous low. I'm sorry, this higher low, it's higher than this previous higher low. This high is higher than this previous higher high. So when you see this happening, you're looking for an uptrend. It's an uptrend, you're looking for buys. Each peak is higher than the last peak for a higher high. And this peak is higher than this peak. And for a higher low, each pullback low is higher than the last. So when you see a pullback happening here, when you see a pullback and it creates a higher low before a continuation to the upside, you spot another peak indicating that this higher low is higher than this previous higher low. So keep that in mind. You may see some pullbacks during a uptrend or a downtrend in the market, which is normal. It's very typical. So when you see pullbacks happening in the market, do not be afraid that the market is going to change direction and it's going to go against your prediction. Just keep in mind that the overall trend, it's an uptrend, and you may see some pullback, but it's a temporary pullback before a continuation to the upside. So you may see a pullback here, but it's temporary. As you can see here, it resulted a higher high, a new higher, a higher low, a new higher low before a continuation to the upside. And you saw another pullback here, creating a higher low, and another pullback here, creating another higher low in the market. And changing it to a line chart, you're able to see that. Same thing with sales. You're able to see pullbacks on a downtrend here, going to the upside, but it's temporary. And then you see a continuation to the downside. Now, when you see this, it is a overall downtrend. And each peak is lower than the previous peak, and each pullback low is lower than the last. This confirms sellers are in control. Sellers are in control during this market phase. So this is how you can spot the difference between an uptrend and a downtrend. And it's good to train your eyes and practice by drawing this. And just like how I'm showing you guys here, this is how I practice. I practice by back testing and taking the time to draw these higher highs and higher lows, lower highs, lower lows, equal highs, equal lows on the chart. And there's tools that you can use to make this happen, and make sure to utilize these tools for your benefit, to train, to practice, so that way you can improve your skill set, and you can improve as a trader, and you can train your eyes to spot these different market phases. And that's how you get better as a trader. Now here we see a slight consolidation between a downtrend and an uptrend. Typically, when there's a market change direction, there is a consolidation. In the midst of that, there's a consolidation phase, a slight consolidation phase before a break of structure, either to the upside or to the downside. And you see here, we were at one point, we were on a downtrend, then market started to consolidate because market was slowing and there's a indecision between buyers and sellers, and they're building up liquidity here now. And then finally it broke above to the upside, and it resulted a market change direction to the upside, resulting in uptrend because we started to create higher highs, higher lows, higher highs, and higher lows. See, this was the last lower low here. We created a higher low here. Why? Because this low is higher than this previous low. And we see higher highs and higher lows. Oops, sorry about that. When you see higher highs and higher lows, now this confirms buyers are in control. Each peak is higher than the last peak, and each pullback low is higher than the last. So this confirms that buyers are in control of this market. And when you see a consolidation phase, price keeps rejecting at the same top level, and it's bouncing from the same bottom level, indicating that there's indecision in the market and there's either an accumulation or a distribution phase. In this case, it's a distribution phase. It's a liquidity buildup before the break of structure to the upside, right? So let me see here. Actually, this might be an accumulation phase because it's building up liquidity where there's buyers, there's a zone of buyers and sellers, and typically is at the lowest price. So it's building up an accumulation before a break of structure. And we'll talk more about that when we discuss about supply and demand zones. We'll talk about accumulation and distribution phases. And as of right now, all you gotta see and learn is the different types of market phases. and spotting these different trend directions. We can look at another asset pair. USD is the same concept. I spotted the different market phases here. Currently, where price is at, it's on a slight consolidation within this overall downtrend. So we have been on a downtrend. We see a higher high here, and then a lower high, and then a lower low. So it started to create lower lows and lower highs, indicating a downtrend. And now price is currently on a slight consolidation. So we may see a continuation to the downside once we see a break of structure, or it could break above and it could result a change of direction to the upside. But as of right now, we're waiting to see whether there is a change of direction on Euro USD. We're waiting for a break of structure. So it could either break above or below. But there's higher chances that it may break below for a continuation. Why? Because we are on an overall downtrend. And you want to trade with the trend, not go against the trend. You want to trade with the trend. Just like an ocean, right? There's waves and there's tides and there's there's a you want to go with the wave. You want to serve on the direction of where the wave is going, right? So that's how you want to see this. The market is like a wave, is like a wave, is like an ocean, right? You wanna trade with the trend. You wanna go with the flow. You wanna go where the overall trend is going. So you see a pullback, right? You see a pullback, price is correcting itself, and eventually it shot back down for a continuation. And you'll see these pullbacks in the market during these market phases. There's another example here. Another pullback happening on this uptrend phase before a continuation to the upside. And you do not want to trade during pullbacks. You do not want to trade during corrections because you know that the overall trend is on an uptrend and you want to trade with the trend. So whenever you see a downtrend happening, and then you see a correction going to the upside, keep in mind that this is just temporary, right? These pullbacks are temporary. You know that the overall trend is on a downtrend. Why would you want to trade against the trend? You want to wait until you see another lower high forming before a before you take a sell and before you continue before the continuation to the downside. So you want to spot this every time, right? You want to spot these moves. Here we see another pullback, but we know that it created another higher high. I'm sorry, a higher low. There's a higher low here. This is a lower low, actually. This is a higher low. And this is a lower low. And when price fails to create another lower low, and instead it creates a higher low, you know that there's a change of market direction and it's on an uptrend now, right? So when you see price on a downtrend, for example, and then it fails to create another lower low, and instead it creates a higher low, you know that it's now on an uptrend. Here we have a consolidation because we have equal highs. We have equal highs and equal lows. Price hasn't broken above. Instead, it broke below on a slight downtrend, and then it resulted a uptrend move. This is a slight downtrend. It went from a downtrend to now an uptrend. You see here, we have an overall trend to the upside because we have higher highs, higher highs, higher highs, higher lows, higher lows. So this is an uptrend. And you can look at based on the line chart, you can spot these peaks in the market, right? So I like to look at the line chart to spot these peaks in the market to see where the trend is heading. Now, make sure to train your eyes and to continue to practice this because this is how you will develop the skill set. The trend confirmation, the reason why this is so important to learn and to identify is because you'll learn it helps traders align with the dominant market direction. You can also spot entry and exit points. Spotting higher highs and higher lows, or low highs and lower lows, signals potential continuation or reversal opportunities. This can also help on your risk management, knowing whether the market is trending or ranging avoids entering against momentum. So when you spot these different market phases, it prevents you from any 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 trade losses. Knowing whether the market is trending or ranging avoids entering against momentum, entering against a trend. Just like I mentioned earlier, you want to trade with the trend. You want to go with the flow. You want to go on the momentum of the market, on the momentum of where that wave is going. You see that it's on an uptrend, you want to look for buys. When you see the market is on a downtrend, you want to look for sells. And when it's a consolidation phase, it's indecisive, and you do not want to enter for a trade during a consolidation when the market is going sideways. So this can also improve on your strategy by spotting these different trends. Trend following works best in up or down trends. So it's best to trade when you're on an uptrend or a downtrend. You do not want to trade during consolidation. The strategy will work better during an uptrend or a downtrend because you know that on an uptrend you're looking for buys and on a downtrend you're looking for sells. And this is all through repetition. Repetition is key. They say repetition is the mother of all skill. So you want to learn by repetition to spot these different markets. The more you train your eyes, the more you get on the charts and you practice and you spot these different trends, you're able to learn and get this down naturally. It'll become second nature, right? You're able to spot these different markets just like this. So, in short, higher highs plus higher lows, just like I note here, higher highs and higher lows equals uptrend, lower highs, lower lows equals downtrend, and equal lows and equal highs equals consolidation phase. So make sure you guys review this, rewatch this video if you need to, and continue to practice this first step because without this step, you can't move forward on the rest of the steps in the playbook. So make sure to practice step one. Look at the 4-hour time frame to spot the different market directions, the different phases in the market. And we only have 3 phases: uptrend, downtrend, and consolidation. So before you move forward to the next steps, make sure you rewatch this video over and over again until you understand it and you're able to spot these different market phases and you're confident enough to move forward to the next step. Do not trade Do not enter any trades without the completion of all these 7 steps. You want to take it step by step. That's the whole purpose of this playbook because it's a playbook, it's a guide, it's a blueprint for you as a trader. Just like any other sport. Basketball, they have a playbook. Football, they have a playbook. Before they call out a play, they go over the playbook and they look at the next plan. They look at the next play before they execute. So you as a trader, you want to get this playbook down step by step. And today we went over market direction. So the first step of this playbook is market direction. So you want to spot these different market phases before you go on to the next step, and the next step after that, and the next step after that, before you execute any trades, whether it's buy or sells. You want to follow this playbook step by step by step. So I wanted to keep this video short and sweet and straight to the point and go over the first step, which is the 4-hour market direction. Now, I hope you guys got some value out of this. Please like and subscribe and share this video to anybody that's a beginner, intermediate, or even in advanced, right? I'm still learning, right? By teaching this, I'm teaching myself and I'm reminding myself that it's very important to look at the different market directions and to spot these different market phases before entering a trade, right? Without this first step, you're lost. You don't want to go into the market blindly and not knowing what to do. You want to spot these different market phases. So make sure to like and subscribe, and put a comment in the chat box if you guys have any questions. I'll be more than happy to help you guys and guide you guys throughout this journey. And stay in tune for future videos. I'll be posting the rest of the steps. I'll be posting a video each week covering the rest of the steps. This week, we went over market direction, and go ahead and apply this first step and watch and see that it's all going to make sense. The more you practice, the more you study, the more time you put into the skill set. And I can't wait to see all the progress you guys will be making and the results that you guys will be getting. This will be next level. So I appreciate you guys. I love you guys. Thank you guys for tuning in. Until next time, God bless.